Welcome back to Enlightened Trading. I'm your host Conrad, and we have another look at the stock market today. So, as usual, this is my TradingView page. Go check it out. Posting some regular content here, and if you don't want to miss out on some very interesting ideas, make sure you are followed here, or you follow me over here. So, as well, subscribe and follow me here on Instagram if you want to have some fun along the way, posting some memes on a regular basis. So make sure you leave a like and follow me over here as well. So starting off into this video, this is Jacob Canfield, a YouTuber, and I've been following him for quite some time now, going back into 2018, where he mostly talked about crypto, and here he's talking about the stock market. 5 reasons why he thinks the stock market is in serious trouble. So, I am not going to talk about this video in specific, but you should make sure you check it out as well. So here's my TA, my technical analysis on the stock market in general. This is the S&P, the SPX, and you can see I drew this pitchfork or a long time ago, actually. I think back here in 2018, I drew it, and we have been respecting it very nicely. And you can see actually how we stayed in this channel and how we held here above the middle, the median of this pitchfork multiple times here, according to this channel, and we now broke below it. We actually touched 0.382, I think, to the point. So that is very nice to see. Actually, I can pull it up. It is the 382 perfectly here of this pitchfork. So it seems like it's still respecting that level nicely. So moving averages are I think the weekly time frame is the most reliable currently. You can see how we touched the 200 weekly moving average multiple times here in this bull phase and have been rebounding it from it every time. Now, we have not touched it yet, so there is still the potential for another leg down to touch it, and I think if we touch it, we will rebound. Well, it depends on how far we will rebound. Maybe we will just, get another leg down, touch it, come back up, make a lower high, touch the median, which was very important resistance and support here in the past. So maybe touch the median and then go lower once more, maybe even to the bottom of this channel. So that could be very likely, of course. I do think that a bounce of the 200 weekly moving average is rather likely, and is for the most likely scenario if we get rejected from this area of the median. So we are now again on the 100 weekly moving average, actually just on it, and we have to wait and see if we are going to be rejected. We rebounded yesterday actually pretty nicely here around 5%, so that is nice to see. Well, but it's not enough yet. Definitely, we still have a small gap to close, and we are currently trading lower. You can see we are almost down 3% pre-market. We are going to open in 2 hours, so that's pretty significant that we again dropped to, you can see here 280, although we closed at the high of yesterday's close or of yesterday's candle. So that is still not too nice to see. If we manage to get back to 313, then this is a possible scenario of inverse head and shoulders, where we would have the left shoulder right here, the head, and then the right shoulder to then confirm the breakout. But until then, I still do remain actually rather bearish, especially with this global economic slowdown we are currently experiencing. So I'm not going to buy anything currently. I still have to wait and see what happens and how the market reacts to this current market environment. So yeah, that's that. I do think the weekly time frame is the most reliable currently. So the Dow Jones, of course, looking very similar. One of the key differences is, though, that you can see we have still a lot of room to the 200 weekly moving average. That's actually pretty significant. Oh, that's a monthly. That's my fault. It's my fault. Yeah, we actually touched the 200 weekly moving average perfectly. I was a bit puzzled. No, we touched it perfectly actually. Also held in this pitchfork for now, so that is also nice to see. So now it depends on whether we will rebound. You can see we never really closed below the 200 weekly moving average. All the way back to 2008 and 2009. You can see how we wicked to it, but never managed to close below. So we wicked to it once more. If we get a close below the 200 weekly moving average on the Dow Jones, then this could be pretty significant. Not only regarding my TA, but many people are using moving averages, and I think this will be pretty significant. So going into the bigger stocks with some quick technical analysis, this is Amazon still holding pretty nicely. I do like Amazon here. Information, of course, this was a fake breakout. That's not nice to see. So we still have some resistance to go over, but we also rebounded very nicely yesterday. So it seems like Amazon comparatively is still holding up very nice. Of course, Amazon in this current market environment with the coronavirus, for example, still has a lot of business, and many people actually could be ordering now online instead of going to shop. So maybe even Amazon will be a good play, or at least will hold its price rather nicely. Tesla now falling out of the possible, or almost falling here out of this possible descending channel. That's actually not nice to see that we closed, or we didn't rebound too far, and actually were rejected here of the 21 daily moving average. So a bit bearish here on Tesla. You can see we now are making lower highs and actually lower lows. So maybe this daily downtrend will continue. We have to wait and see. We rebounded 6% yesterday, but are now down again quite a lot. So this topping formation seems to be actually more bearish than anything. So we are now also below the 50 daily moving average, also not nice to see. So it seems like there's still some room for downside, and yeah, I think the most likely target is still around 380 for a retest, but that doesn't have to happen. So Apple also, I mean, holding up not too badly. Of course, a pretty drastic drop compared to Amazon. That's that is for sure. We are now making daily higher lows and have a horizontal resistance line. So this has potential for an ascending triangle for a reversal, but this also could still be a bear flag. Weekly time frame, still holding up not too badly. We have a lot of room to go for a weekly higher low. So that is also, of course, nice to see for long-term price. A retest of 233 is still in the play. So we are now being rejected off the 21 weekly moving average. We have to wait and see what happens today, but you can see we are already down 3% almost pre-market. So the market already gave half the yesterday's day back to yeah. So I mean, not too bad, but comparative to Amazon, for example, pretty bad. Google also a pretty drastic drop from the top, but now again rebounding nicely and not too far down pre-market. That's nice to see. Weekly is below the 21 weekly moving average, but back above resistance, or no, actually at resistance currently. So if this manages to hold, then we can see Google go higher. But for now, this is a retest of resistance, and still a lower high is rather likely here on Google. Yeah, comparative again, two other stocks similar and bad comparative to Amazon. Facebook, you know, also dropping pretty hard, but not too bad. We have a double top here around 220. That's actually not too bad in my opinion. This could be a weekly higher low. I mean, it's a lower low compared to 174, but on a monthly time frame, this could now be a higher low, and we could move into an ascending triangle that is still in the money. But you know, until we break 122, I'm still long-term bullish here on Facebook. Even if we see an economic slowdown, you can see how we touched almost perfectly the 200 daily weekly moving average. So that's also nice to see that we held that level. Not too significant in the past because it's not as established. Daily moving average, we are all below the daily moving averages, so that is not too nice. You can see how they are crossing currently. So maybe we'll see a V-shaped recovery, a short one into a daily lower high. We have to wait and see. So Walmart and so forth, I think I will be covering those stocks another time. But you can see how we rebounded very nicely here on Walmart after this drastic drop, and actually bottoming here on a sequential 13. Very nice buying opportunity. So that was a very nice opportunity for any long positions. Uber, I think it's dropping pretty hard. Yeah, Uber dropping very hard. I think it's also currently not profitable, so that is not nice to see. And Spotify still holding its gains with weekly higher lows currently, and then horizontal resistance line here. So that's nice to see and possible for an ascending triangle. So I think that's actually it. I think I won't be going much into any stocks or closer into any stocks. But if you want to have some closer TA, and if you want me to go a bit more in depth, then definitely leave a comment and let me know down below the video. As usual, make sure you are subscribed to my channel and leave a like. It really helps me, and of course I like to see it very much, and I get pretty happy about it. So thank you so much for watching and staying tuned here on my channel. And yeah, I hope you are staying safe and don't get sick currently. So yeah, stay safe, and see you guys and girls or people back next time. Bye.